Stavros Tousios for M4Markets, and today we're going to have a quick look at gold and pound. For gold first, let's not forget that we talked about the fact that we've actually managed to cross the golden pocket here at 61.8 around the 1900s. And what is interesting now is that we see that yesterday we received a retest of that level, okay? But that doesn't necessarily mean it's going to hold because it's the first time. However, what we want to see is we want to see a break above the 1930 and a potential move up towards the 1974, which is the next important level. I would probably say, yeah, even if we take the 1967. Now, this leg to the upside remains still kind of impulsive. We can also confirm that by looking at this bias over here. You know, we are above that level, and this is where we actually came down and retested. We see no signal for a potential pullback now, okay? And that is the same story on the 1 hour. On the 1 hour, may I add that we actually see a bullish hidden divergence over here, okay? So we want to stay above the 50%, which is exactly where we came and retested yesterday, right? So with that said, of course, that means that any move to the downside needs to be held either by the channel over here, or perhaps a false breakdown to 61.8 will not be against the idea. We would, however, prefer to come back within and then finally start breaking above fresh highs. Now, this is a level where you know, price action becomes restrictive now because we have some sort of consolidation. And in case we do lose the 61 over here, the likelihood of getting all the way down to that low at 1867, which is a swing low, is going to increase. Okay, so the important thing is that we are holding above 61.8. GBP, on the other hand, against the USD, is doing something similar, but we are looking at the 50%. We had a go at 124.30 back in December. We went all the way down to 38, making the Fibonacci retracements very important. And then now, actually yesterday, we went all the way back up above the 50%. We missed the top, which, I mean, it still is a double top anyway. And we kind of don't get an actual signal yet for a potential move to the downside. That means that in case 123 holds, that's going to be probably in the session and tomorrow, who knows, even for the week. Tomorrow is the end of the week, by the way. But if we do manage to stay above 23, guys, this is probably going to head towards, you know, the 128 next, which is the next big resistance level. Of course, we need to break above the 124.45, 125, which is the sort of another level we need to take into account. And also, look, we kind of still remain in some sort of trend acceleration. Okay, we had a false attempt over here to break lower, but the 38 formed support. And what we currently see, if we take into account the last leg to the upside, is we kind of seen an extension of the 100%. Now, that can be good and bad. Good, why? Well, because you know, we are still above the 120-200, and as long as we remain above 120-200, we are most likely going to go up or not. But it's also bad because so far it remains an ABC, which means that if we assume that this is a 5-wave move, which doesn't really look like, and this is a 2-wave move, means that we're going to see further continuation. But given that we have a nearly 99% correction over here, maybe, I'm just saying maybe, all of this structure is going to turn into a sideways price action. So it is important that we stay above 123 and inside this channel for further upside. Otherwise, you know, a breakout below this channel again could send us back to 180.27, and from there we can probably see what it's next.